market sentiment is going to make 20% of our trading plan. And what market sentiment is it's simply understanding how institutions position themselves against retail traders. So the Forex market is something called a zero-sum game. And what a zero-sum game means is that for every winner, there is a loser. So the winners in this game are always going to be the banks and the institutions, and the losers, unfortunately, are going to be a retail trader. So a retail trader is someone just like you or me, someone trading from their home, not trading with extensive amounts of capital. Banks and institutions are going to be leading the market, and it is always important that you have the perspective of wanting to trade like the banks and institutions. Never try to outsmart banks and institutions. It's much simpler to learn and adapt to their own ways rather than try to outsmart them and end up like another losing retail trader. 95% of traders that enter the Forex market fail, and these are all retail traders. So we always want to make sure that we are doing the most to separate ourselves from the general population of traders that enter the market and have a very, very short lifespan. So if we take a look at market sentiment even deeper, we could see that banks and institutions control over 93% of market volume and liquidity. So if we take the number of all the percents lined up in this diagram here on the left-hand side, you could see that we begin with JP Morgan in control of 12.13% of the market share. And that is around $600 billion of the daily 5.3 trillion circulating volume in the markets. Beneath that we have UBS, Bank of America, Citi, HSBC, Goldman Sachs. These are all banks and institutions. It's not important to know which bank has what percentage. It's just important to recognize how much control the banks have in this industry. It's also very, very important to understand that banks and institutions have entire teams that they put together to analyze every trade and every currency pair technically and fundamentally before they ever even consider entering the market. If a bank wants to take a position, it has to get approved by so many different people, especially if it is a large position. As retail traders, we must do this job ourselves. Now, there's a couple pluses and minuses to this. The main minus is that it's going to be a lot easier for us to make a mistake and lose money. So we must be very, very on top of the game and make sure that our fundamentals are looking perfect, that every single part of our trading plan is aligned to the T. So it's very, very important just to understand that retail traders control a very, very, very small portion of the market. And when you understand this, it will make you think on a bigger level. You have to think, if I have $600 billion going into the market right now, am I going to be taking these kinds of positions? And if the answer is no, then you should definitely reevaluate the reason for you ever considering that position in the first place. A bank is not going to enter a $1 billion position, multiple $1 billion position, based on something very simple like a key level or a chart pattern. They need to make sure that there are multiple confluences lining up. And the word confluence is something that you're going to hear repeated very often throughout the span of this course, and you can just jot down that confluence is another word essentially for reason. So if we take another deeper look at the market sentiment, the more obvious a trade is going to look, the more likely that an institution will go the opposite way just temporarily. And what this means is this is something called a stop hunt. So a stop hunt is when institutions understand that a retail trader is going to do something very basic. For example, go short at a resistance level or go long at a support level. So what they'll do is they'll temporarily shoot the price in the direction that it's not supposed to go, take out the retail traders by triggering their stop losses, and then reverse the trade in their direction. And what this will do, it'll give them a better entry, and they'll instantly go into profit into their favor. So it's very, very important that we recognize these tactics used by institutions and that we eat, sleep, and think like one as well.